actually be carbon negative in some of these ways. There's other waste streams that you're removing that you could upcycle as well. The other way to look at biotech and mining from the waste and sustainability aspect is there's a lot of metals left in tailings. There's a lot of rare earth in mine impacted water. And so, how do we valorize those waste streams? And when you can do that, not only do you take the value out of those waste streams, but you're also reducing the liabilities because you have less metal in there. They're less toxic. And so this is the beauty of biotech, is that if you do it right, you create value while you're reducing your environmental liabilities. And I love that because I think it's the smartest way to have a sustainable solution. Sustainable being defined as something that is able to be integrated into a system and continue to be used in that system. And so it really, I think, has this huge potential to have this double value, that miners can take that value and have the reduced liabilities and pay for those solutions with the return 10
We
times.
announced earlier this year a 10,000 metre drill for equity program, diamond drill meters, and we're probably 70% of the way through that. And a lot of that's focused on Bluff-Agueto, which is where the maiden MRE is. And the goal there is we believe that 450,000 ounces is just the tip of the iceberg. We really want to see something over 1 million ounces at keeping those high grades. So it's a big value proposition for us to have a high-grade open pittable resource. With gold prices where they're at the moment, toll treating, trucking to other operations, it's very economic. And aside from that, we've also tested two of the high-quality regional targets, and both of those have come up with really, really exciting results. The Poku Trend, only 3 kilometres from Bluff-Agueto, 110 metres at 0.5 grams per tonne. 300 metres long strike, another sort of 50 at 0.5, and that's your typical West African bulk tons, lots of ounces. And then 11 kilometres north of Bluffo, we also got the Pranoi prospect, where we're hitting sort of 3 metres at 8, so more of your narrow vein, high grade stuff. So we've got a lot of variety, we've got a lot of targets, and just about every hole we put in is finding gold, which is, you just don't see that in WA.
If you look at the kind of the macroeconomic picture, certainly what we've been seeing for some time now is the central banks kind of battling against the inflation problems that we've had in the last few years since COVID. Obviously, those concerns, while have kind of come down or reduced, it's certainly something that was still a question mark coming into this year. How will central banks behave? What will it mean for monetary policy? Expectations around interest rates, and all of that plays into the kind of what drives gold. Interest rates, and particularly in the US, are obviously a key factor. Now, obviously, if you look at what's happened since, there's been a lot of volatility in the markets. We've continued to see that question mark around central bank policy and what that may mean, constantly being revised. We've had what we saw in the first quarter as well, was the enacting of the US tariffs. Huge news globally, and obviously, while tariffs weren't applied to gold directly, it did create an overall market impact. We saw greater levels of volatility. We saw the dollar sell off. We saw a kind of treasury sell off as well. So again, that plays a role in how gold will perform, because it doesn't perform in isolation. It performs in the context of how other assets are performing too. And I should also mention stocks too. They took a hit as well off the back of that. So I think if we look at what's happening with investment demand, certainly you can see from a macroeconomic standpoint, there are good reasons why investors moved into gold, or moved more so into gold in Q1, because of those reasons. The kind of the volatility itself driving things, but then that leads on to question marks about the future as well, and expectations. So things like US tariffs and trade deals and kind of the upheaval that's causing, that's not something that will necessarily be solved in a matter of days or weeks. This could take months and years. So again, there's real question marks around what the future may bring. And again, in those times of heightened uncertainty, that really plays to gold strength.
Even a small hiccup, a short stop, can mean millions in lost production. Keep them running is not just about output. It means you are getting the most out of your existing assets, which ties straight into your decarbonization goals. Then you keep running a machine is is also connected with the decarbonization, because when you stop the machine and when you restart the machine, during this process, you have a much more CO2 emission. Then keeping the uptime high, okay, in a certain way, you have directly influence in the decarbonization process. Taking our GMG, for example, they are around 3.6% more energy efficient than other technologies, like the RMG, the ring geared mill drive I have mentioned, or the HPGR, high pressure grinding rolls. 3.6% sounds small, maybe, but when you got over 150 of these machines running globally, today our installed base is more than 150 machines, that efficiency adds up. Replacing them with less efficient technology like RMG or HPGR, okay, would means the same as putting something between 40,000 to 89,000 extra cars on the road in terms of CO2. So yes, uptime, energy efficient, and sustainability are all part of the same puzzle.
You've got older, very experienced geoscientists who one day are going to retire. You can't stop them. And you've got a smaller and smaller number of new graduates coming into market with a great big gap in between. And it's well published inside the industry. Fixing it is a big problem, because if you talk to your average geologist, they didn't find their way into the industry because a careers advisor told them to. This industry is something, this profession, if you will, is not something that kids are told about. They discover it as they go along, and they're not discovering it fast enough. So we've got a massive skills gap coming in the next 10 to 20 years. Serious problem. So we've tried to, rack our brains as to what we can do to help. We can't fix it, but we can try and help. And we thought one thing we could do is improve that discovery process. So just under a year ago, we launched a new cloud-native conceptual modeling product for geology, and the target market was a 17-year-old. That was the 17 to 18-year-old is the picture we had in our mind. We commissioned a gaming company that did a lot of work for Disney, Pixar, these sorts of companies, and they just know how to build games for kids. That's what their marketers have done it for years. And we got them to build something for geology. It's called Visible Geology. And then now we're launching that out into particularly universities, earth science programs, geography. Maybe it might make its way into school, to bring geology alive and make it make sense for kids.
Talking about, as I say, companies which really have very, very limited resources to take on additional regulatory responsibility, and let's not forget risk associated with these proposed reporting requirements. We also felt and reminded the regulators that this was yet another reason for companies to not go public, because if you could avoid the costs and regulatory risk associated with the mandatory reporting by remaining private, then you would. And of course, that's obviously a talking point for marketplaces around the world, that it's abundantly clear that more companies are electing to remain private for longer because of the costs and legal liabilities and risks associated with being a public company. So we don't need to add any more risks to companies in that regard. We were also concerned that again, the costs would be significant for implementing these things. We saw, virtually all of the big four accounting firms around the world have consultancies, and they've hired people and offering their services. But again, these are not large oil companies or giant producing miners like Barrick or BHP or Rio Tinto or whatever. Again, as I mentioned, these might be 3 people that are actual employees of the company, struggling to raise enough money to fund next season's drill program, and it's very, very challenging. And as I say, we were of the view that additional cost would really have had a devastating impact on the amount of exploration activity which would take place.
Through the contacts in Suriname, we got in touch with the owner, did a deal about 6 months ago. Bit over 6 months ago. And since it was reasonably advanced, I mean, it's early stage, but it does have some decent drill holes. There's lots of data available. we decided to list it, and we listed it in Canada 2 months ago, 2.5 months ago, and got picked up the backing from some pretty significant shareholders in Canada, also in the Netherlands, surprisingly. And we're going to start drilling in the next month or so. We've got 2 drills on their way, and we're going to plan on 10,000 meters.
Suriname always has had we've had a long history of mining. Mining has always been one of the pillars that has driven the economy. In the past, it was the bauxite industry. Gold was always around there, but it really picked up, was it 2012, 2013, when the price really spiked up. And, from there to now, we've had 2 majors mining in Suriname. There's also, the small scale mining, which I think their production is on par with these majors. So there's a lot of Brazilian miners. A lot of local people are also getting more experience and knowledge in mining it. And throughout the years, there have been a significant but small group of local people, such as myself, being trained into the gold exploration and gold mining side of business. Suriname is I would say an overall mining friendly
VMS
country.
deposits are very interesting in part because they're polymetallic. So these deposits commonly are associated with several different metals, oftentimes up to 5. What's very interesting about the VMS projects that we have in Newfoundland is that they're located in the Buckens district. And the Buckens district was home to an Asarco mining complex that lasted about 60 years from the 1920s to the 1980s. For about 50 years of operations, the Buckens mines were considered to be the highest grade VMS mines in the world. These were mines that delivered ore that was about 20% base metal, over 20% base metal content by volume. Over those 70 years, 60 years of production, the mining complex also produced almost 700,000 ounces of gold. So, you're talking about a mining system that gives you, let's say economic flexibility and exposure to, not only critical metals, but also precious metals. And when you're developing economic models for these deposits, you can actually emphasize one metal versus another, which gives you a tremendous amount of flexibility. So, in this case, at the Buckens project, we have in the Buckens district, I should say, we have gold and silver, as well as copper, lead, and zinc.
A lot of jurisdictions call for the mine to set aside some kind of financial provision or some kind of guarantee in place in the event that the mining company has to close, so that guarantee can be put in place or realized to close the mine properly. Now, if you are not planning on doing any closure or rehabilitation work during the life of the mine or the facility, it's a big number that you have to have set aside there. But if you do it proactively, concurrently, you don't have to set aside as much money there. So if generally, then you end up with something that's greener or more sustainable, or at least more appealing to the local communities, that can help reduce your social liability in terms of engaging with the right people at the right time, the goodwill of the community, the local community, the regional committee, communities. And then the bigger picture in terms of if you've looked to minimize long-term, say, groundwater seepage, that reduces your environmental liability in terms of the groundwater pollution plume. So if you've done it properly early on, you've got less to clean up.